What if I told you that somewhere in the penny stock market right now, there's a company that looks completely broken on the surface, but behind the scenes is making some of the strangest, most unexpected moves you'll ever see. A company that started in one industry, pivoted into another, and is now trying to reinvent itself again, in a completely different direction. No headlines, no hype from mainstream media, but a series of quiet moves that could either turn into something big or collapse completely. Because this is the kind of stock that doesn't move slowly, it either explodes or disappears, and right now, it's sitting in that exact moment. So the real question is, are we looking at a comeback story? Or just another penny stock illusion? Now here's where things get interesting. This company wasn't always doing what it's doing today. At one point, it was just another small business with no real attention, no strong growth, no big narrative. But then it made a decision to move into one of the fastest growing industries in the world, energy. Not just any energy, but renewable energy, EV infrastructure, battery storage, and power systems. We're talking about a market that governments are pushing. Billion-dollar companies are racing into, and demand that keeps increasing every single year, and this company wanted a piece of that, so it started positioning itself, building systems that could support electric vehicles, working on power distribution, technology exploring energy storage and solar solutions. On paper, that sounds like the perfect setup, a tiny company entering a trillion-dollar industry, and that's exactly the kind of story that creates massive stock runs. But here's the part most people don't talk about. Just because a company enters a hot industry doesn't mean it succeeds, because execution is everything, and when you look deeper, the reality starts to hit. Revenue hasn't been strong, losses have been stacking up, and financially, things have been very unstable, in fact. The company has struggled to generate consistent income. While still burning cash at a high rate, that's the first red flag, because in the penny stock world, weak fundamentals usually mean one thing. Instead of doubling down only on energy, the company made a move that shocked a lot of people. It started expanding into completely different areas, and this is where the story takes a turn that most investors didn't expect, because recently, the company announced a major acquisition, not in energy, not in EV, but in something totally different, a beverage company. Yes, you heard that right, in early 2026. The company entered an agreement to acquire a fast-growing beverage platform with established brands and real distribution, and this wasn't just a random side project. This was positioned as a turning point for the company, focusing on scalable revenue and long-term growth. Think about that for a second, a struggling energy penny stock suddenly shifting toward a revenue-generating consumer brand. That's not a small move, that's a complete strategic pivot, and it didn't stop there. Shortly after that, more updates started coming in. The company's subsidiary secured a $1 million investment at a $20 million valuation. They brought in experienced leadership from the beverage industry. They started forming partnerships, even involving athlete promotions and brand exposure. So now, instead of just being an energy play, this company is trying to become something else entirely, a hybrid story, energy plus consumer products plus branding, and this is exactly where things get dangerous and exciting at the same time. Because when a company pivots like this, two things can happen. Either it finally finds a working business model, or it spreads itself too thin and fails everywhere. Now, before I reveal the name of this stock, you need to understand one more critical piece. The stock itself has been extremely volatile. There have been sharp drops, unstable trading patterns, and even major structural changes. At one point, the company executed a massive reverse stock split, compressing thousands of shares into one. And moves like that are usually done for one reason: to reset perception, to attract new investors, or to survive. Not exactly something you see in stable companies at the same time. The stock has seen heavy fluctuations, with sudden drops and unpredictable movement. And that tells you something important. This is not a slow, steady stock. This is a high-risk environment, the kind where momentum can push it up fast, and reality can pull it down even faster. Now here's the moment you've been waiting for. The company we're talking about is Ozop Energy Solutions, ticker symbol OZSC. And now that you know the name, everything starts to make more sense, because if you've been in the penny stock space for a while, you've probably heard of it before. It's one of those stocks that has gone through hype cycles, silence, and now possibly another phase of transformation. So the real question becomes, why are people still watching it? And the answer comes down to one thing: potential. Not guaranteed success, not strong fundamentals, but potential. Because OZSC is sitting at the intersection of multiple narratives, energy of infrastructure, consumer brands, and now, scalable revenue attempts. If even one of those plays works, it could change the entire direction of the company. But here's the reality you cannot ignore. The risks are just as big as the opportunity. Financial struggles, execution uncertainty, constant strategic shifts, and the typical volatility of OTC stocks. This is not the kind of stock you invest in for safety. This is the kind of stock people watch for a breakout or avoid completely. And that's why it's so controversial, because depending on who you ask, some will tell you this is a hidden turnaround story, and others will say it's just another penny stock trying to survive. So where does that leave us? Right in the middle, watching closely, because stocks like this don't stay quiet forever. They either fade away slowly or suddenly without warning. They move fast, and if you're paying attention early, that's where the opportunity is. But if you're late, that's where the risk hits the hardest. So the next time you see a quiet penny stock making unexpected moves behind the scenes, don't ignore it immediately. But don't trust it blindly either, because sometimes the biggest opportunities and the biggest traps look exactly the same at the beginning.